Good morning, everybody. We have a lower trade in the grain markets here early on Monday morning. It is 6:30 a.m. Central Time. March corn futures down 4 1/4 at 416 1/4. January soybeans down 11 1/4 at 1151 3/4. March Chicago wheat down 8 3/4 at 566 3/4. March Kansas City wheat down 9 1/4 at 533 1/2. March spring wheat down 3.5 cents at 547. So a little bit of pressure here to start off the week. Brazil caught some rain over the weekend, much needed rain. There were some storms that passed through a lot of key soybean growing areas during the last several days. We've got more rain in the forecast over the next 7 days. A lot of Brazil and a lot of these key soybean growing areas will see 2 to 3 inches of rain, and there's a little bit more in the extended forecast. Despite early season weather issues in Brazil, they started off very dry, of course. Planting was delayed initially. Just about every analyst out there continues to project record soybean production. And that's not necessarily because the yields are going to be record large or phenomenal by any means. It's because Brazil continues to expand acreage at a fairly rapid pace. So even given, trend line or slightly below trend line yields, they're still able to produce a record crop. USDA may adjust those South American crop estimates in their report on Thursday. I'll talk about that here in a minute. Fund traders remain heavily long the corn and soybean markets. Length has been reduced a little bit in recent weeks, however. Estimates at Friday's close, funds estimated to be net long 246,000 contracts of corn. That's still a pretty hefty net long position. Funds estimated to be net long 186,000 contracts of soybeans. That's also still a hefty net long position. Funds now short the SRW wheat market to the tune of about 11,000 contracts. Combined net fund length across the corn, soybean, and SRW wheat markets, 421,000 contracts. That was up to about 550 at one point at its peak. So overall fund length across those three contracts has certainly come down, but it's still pretty large historically. There's still only a handful of occasions since modern record keeping began that funds have held this type of length across these markets. USDA will release its monthly crop report on Thursday. Traders generally expect friendly numbers in regard to U.S. corn and soybeans. They're looking for a lower U.S. corn carryout number, not by a lot, but 10 million bushels below last month. U.S. soybean carryout expected to fall down to 168 million versus 190 last month. I think some traders are looking for maybe in both crops, potentially a smaller 2020 U.S. crop still. I know USDA doesn't typically make these big adjustments after, say, October, but we saw a November adjustment. I suppose a December adjustment is not impossible. I think that there are people who believe that some of these demand numbers are still too low. So I'll talk a little bit more about that report later in the week, but I think some friendly numbers expected to some degree. U.S. HRW wheat areas will see only minimal rainfall during the next 2 weeks. Drought is slated to persist across much of the southern plains, much of the northern plains. Your key areas for this HRW wheat crop of Texas, Oklahoma, Kansas, Colorado, Nebraska, they're going to see no more than a half an inch of rain in total between now and the 23rd, according to this morning's forecast. So very, very little rain. That drought is going to persist and build. Wheat futures have pushed lower. So we've got these crop issues in the U.S. that I keep talking about, but the market has actually leaked lower. You've got some better weather conditions or forecasts in places like Australia and Canada. There's also some chatter regarding Russia and the idea that it could increase its export quota there. That's a negative factor that would really hurt U.S. export demand potentially. Weakening U.S. dollar has really not helped wheat prices very much. Now, in the outside markets this morning, the stock market's a little bit lower, the dollar's a little bit higher, but in general, the U.S. stock market's been very strong and the dollar's been very weak. We've got kind of the same story at play here. Massive government stimulus has, I think, resulted in some inflationary action across some of these assets, including U.S. equities. Vaccine hopes are also helpful. There's a new stimulus bill that appears likely. So all of those things helped push the stock market to fresh all-time highs just last week, I believe. Now, there is some news this morning that the U.S. may sanction some officials in China because of some things with the election in Hong Kong. Maybe that's why the market's down a little bit. We're only down 100 points in the Dow, which is really nothing. Remember tonight at 7 o'clock Central Time, I will be doing the second edition of the Grain Marketing 101 series. It will be streaming live on YouTube and also on Facebook. If you need those links, let me know. Send me an email to info@standardgrain.com. I've got it posted on my Twitter page. And if you go to the Grain Markets and Other Stuff YouTube page or the Grain Markets and Other Stuff Facebook page, you can find the links there. But I'll be streaming live with Chris Barron of Agri Solutions, who's a friend of mine. We're going to talk about farm budgeting, figuring out costs of production, revenues, all that sort of stuff. We're going to really talk about numbers and how it affects your grain marketing and how it's such an important thing to be aware of. So that will be streaming live at 7 o'clock Central Time tonight. Again, if you need those links, shoot me an email, info@standardgrain.com. Corn market's backed off a little bit. We had this trend line in place off of those August lows, and we're trading below it here this morning again. The March contract got within a few cents of those lows from last week. So we bottomed last week, we recovered, now we're back down. I still think fund liquidation ahead of year's end is possible. Technicals have turned over just slightly. I'm not seeing a ton here in terms of friendly news. I know there's chatter regarding some additional Chinese purchases. We haven't seen a flash sale of anything to China since, I think, November 6th. So it's been more than a month now, I believe. Soybean market has also leaked lower. I would say, given the weather in Brazil, which is looking a little bit better, the market's still holding up slightly better. In terms of charts, I did an episode where I talked about some downside technical targets, 11.18 down to about 10.88. That's your big support zone underneath the January futures contract. Wheat futures down, and that March contract is trading its lowest level in several weeks this morning, market under a little bit of pressure. Cattle market, we saw some cash cattle trade, I think mostly at 110 last week. There was some 109 on Friday. The box beef market was down pretty good, anywhere from $2 to $4 on Friday. Head of the cash open, the Dow again down 120, the S&P's down 15. Bonds up a little bit, US dollars up a little bit. Crude oil is down 49 cents at 45.77 in the January WTI. Precious metals a little bit lower. If you'd like some more information, visit my website, www.standardgrain.com. Go to that website, click on Grain Marketing Plan. If you would like to know when, how, and specifically I am pricing corn, soybeans, and wheat throughout the year, check out that subscription service. It's $49 a month. You can cancel it at any time. There are no other fees. There are no other obligations. I won't try to sell you anything else, I promise. Everyone have a great day today. Remember, 7 o'clock tonight, we'll be streaming live. Talk to you a little bit later.